Gold and silver. This is not a short-term trade. This is not the meme move. This is a 45-year technical structure finally breaking. Silver has just completed one of the largest cup and handle formation in modern market history. A base that began unfolding after the 1980 peak and survived multiple monetary regime, recessions, bubbles, and crashes. And now, after 4 decades of compression, it has broken out. When markets move after this much time, they do not move politely. They move violently. Historically, every major precious metal bull market begins with gold leading. Gold is some monetary metal, right? It moves first when confidence is in currency, bonds, and policy credibility starts to crack. Silver is different. Silver is the volatility amplifier. That's what it is. It lags early, right? Builds pressure longer, and then outperforms explosively once the trend is believable. That is exactly what this chart is showing. Gold already broke out years ago. Silver has been coiling, and cooling decade after decade inside this enormous cup. And now the handle is broken. The cup of this chart spans from 1980, where it blew off the top, through multiple fail rally and crashes and consolidation. Every attempt to reclaim old highs failed. Every rally was sold. Every breakout was faded. Why? Because silver, right? Silver is the bottom part, right? In blue, basically, in red and blue. Silver spent decades digesting the largest speculative excess in its history. Markets do not forgive excess quickly. They punish it with time. 45 years of time, and that time has now been served. The handle is where most investors get shaken up. It is where optimism fades, where boredom sets in, when capital leaves for better stories. This handle was not weeks or months, it was years. And inside that handle, silver forms smaller, nested cup and handle structures, each one tightening volatility further. This is called compression. And compression always resolves the expansion. The breakout we are seeing now is not incremental, it is decisive. That was the largest up day for silver in roughly 45 years, coinciding with a structural breakout above resistance that rejected price repeatedly for decades. That is what long-term technical resolution looks like. It's not a spike, it's not a wick. It's not a wick, it's a regime shift. Now, look at the silver to gold ratio. Okay? Despite silver breakout, the ratio remains historically depressed. Far below prior bull. That tells us something critical. This move is early, not late. In true silver manias, the ratio collapses upward. Silver vastly outperforming gold as retail speculation floods in. This has not happened yet, which means positioning is still light. Skepticism is still high. And disbelief remains widespread. Those are not late cycle conditions. Yes, momentum indicators are overbought. That is exactly what they should look like at the start of a structural breakout. Again, silver is the way to go. Overbought conditions do not end bull market. They confirm them. In every historic silver run, overbought means more overbought as prices accelerated. People waiting for the perfect pullback often miss the move entirely. This breakout is not happening in isolation. It's happening alongside 1. Sovereign debt exploding. 2. Persistent inflation pressure, as we talked about before. 3. Structural deficit. 4. Rising geopolitical fragmentation and declining trust in monetary discipline. Silver is not just a metal, it is a referendum on monetary credibility. When silver finally breaks after 45 years, not whispering, it is shouting. Markets do not build 45-year bases for small moves. They build them for repricing, and that's what's happening with silver today. And there are plenty of opportunity in the ETF world with silver. And if you join my Patreon channel, I will show you. Silver has spent 4 decades being ignored, dismissed, and left behind. That phase is ending. That question is no longer if silver revalues. It is how violently and how few people will be positioned when it does. This chart is not noise. It is history resolving itself.